Hey, welcome there, investorholics and friends and casual viewers. Today we'll be following on in the footsteps of our infrastructure type ETF reviews. Today we'll be looking at IFRA, which is the VanEck Vectors FTSE Global Infrastructure ETF, and this one is hedged. This ETF might be suitable for investors seeking exposure to a diversified portfolio of global infrastructure securities in sectors such as electricity utilities, transportation infrastructure, and multi-utilities that have potential to generate a regular income stream from relatively stable dividend payouts. Stick around, guys. This one's going to be interesting if you're looking for some international exposure through some infrastructure. Hey there, investorholics. This is Scott. KrackTheSky Value Investing will be giving you up-to-date investing news and content so that you can navigate the markets wherever you are. My mission here at KrackTheSky is to give you the knowledge and the confidence to take control of your personal finances, expand your investment horizons, and crack your financial sky. So don't be afraid to give me a thumbs up. And also subscribe. It helps get the message out there. It helps pump the algorithm for YouTube. Yeah, just in general, it sort of gives me a bit more motivation as well to keep doing these little reviews for you guys. Thanks. Okay, let's just dive right in. IFRA gives investors exposure to diversified portfolio of infrastructure securities listed on exchanges in developed markets around the world. Quick overview of the actual index. The FTSE Developed Core Infrastructure 50/50 Hedged into Australian Dollars Index comprises securities in developed countries which provide exposure to core infrastructure businesses such as transportation, energy, and telecommunications, as defined by the FTSE International Benchmark Classification. Obviously, the management style is a replication because it buys and sells what's in the index. So why a factor here? Global infrastructure exposure, so access to a diversified portfolio that provides targeted exposure to listed global infrastructure companies. Infrastructure provides investors with stable income. Global infrastructure assets have provided investors with inflation-linked and regulated income. So we always want that bit of income. Diversified across companies and subsectors. So companies and subsector capping provides comprehensive exposure with diversification across companies and subsectors. Australian dollar currency hedge, so you know that may or may not be of interest to you, but sort of takes out the currency fluctuation, so currency is not something you have to worry about when it's hedged. Okay, let's take a quick look at the numbers. So we had a net asset value of $19.85. Net asset trading, sorry, just above the net asset value at $19.87. So you know you don't really want to be paying any more than the net asset value when you're buying it. So potentially wait until it's trading at a at the net asset value before you buy it. Market cap of $365 million. Management costs, it's sort of probably starting to tick up to something that's a little bit higher than I like, 0.52%. Get a distribution quarterly, so January, March, July, August, and October. Dividend yield of roughly 4.85%. So global infrastructure is a growing asset class that appeals to investors for its diversification benefits from relatively low correlation with other asset classes, historically attracts risk adjusted returns, perceived inflation hedging, and interest rate resiliency, to name just a few different reasons people are looking at these things. So IFRA is made up roughly of 149 companies spread across 50% utilities, 30% transportation, and a 20% mix of other sectors comprising pipelines, satellites, telecommunication towers, and a few other different things. There's a tilt towards transportation services, and then underweighting in railways and other most so the other most visible difference between the 50/50 index and its capped counterparts. So there's not many railways in there. So VanEck, they have strong indexing capabilities, and trading efficiencies ensure that the bid-ask spread is typically sort of 3 basis points. So, like I kind of touched on before, investors won't receive a currency diversification benefit from investing internationally, as the ETF is currency hedged. So that's what I said. So that sort of good and bad part of that is taken out. So the industry is under-researched. From the bit of reading I've been doing, it seems to be under-researched, thus creating investment opportunities in the market and wide sort of disagreements, disparities in sort of the way that some of these companies are valued. So yeah, I think there's opportunity. Whether this fund captures that opportunity, I'm not entirely sure. I'm sort of a bit on the fence with this one. Okay, so you're not losing money. This one's sort of really only been in the market since the 29th of April 2016, so pretty short lifespan. We're looking at total return of 6.39% per annum. Looking at companies such as Nextera Energy, Transurban, which is an Australian company, the big Australian infrastructure company. ENA, SAME, whoever they are, never heard of them. So American Tower, they have all the phone towers in America. Atlantica, I think they're some kind of infrastructure, not infrastructure, they're freight, international freight. They do a lot of air freight from memory. Duke Energy, Southern Co, Enbridge, Dominion Energy, Crown Castle International. The 50/50 benchmark is gaining traction amongst asset managers from what I can gather, because of the diversification it offers in terms of a number of constituents and sensible subsector allocations. That's a bit of a tongue twister. It's worth noting that the FTSE index has not been through a full market cycle, as it was only sort of launched, as I sort of touched on, sort of the end of 2015, early 2016. IFRA will most likely struggle to deliver positive alpha relative to the category benchmark index. So Morningstar gives this ETF a neutral rating, which is effectively 2 out of 5 stars. Hopefully that was a quick overview. Like I said, this one doesn't really set the world on fire for me anyway, but it's definitely something you guys can have a closer look at if you're looking for international exposure to global infrastructure. Are you interested in learning more about personal finance and investing in the markets? If you are, then smash the like here on the left hand side and caress the subscribe button on the right hand side. It's KrackTheSky Value Investing. We'll be giving you up-to-date investing news and content so you can navigate the markets wherever you are. Expand your investment horizon and crack your financial sky. Thanks guys. See you later.